Hi, I'm Pattu from FreeFinCal, and in this video, let's discuss if we can invest in the fixed deposits of small finance banks. These offer rates anywhere between 1 to 2% higher than the fixed deposits of standard banks like SBI, ICICI, HDFC, and for senior citizens, it's a touch more. So what is a small finance bank and what is the purpose of a small finance bank? You can pause the video to see these extracts. These are extracts from the RBI circular. So the essential idea of a small finance bank, the purpose of a small finance bank is to serve sectors or people who usually cannot get served by the big banks. These include small businesses, micro industries, unorganized sectors, and so on. So, for example, if the ironwala in your street, if he wants to take a loan to expand his business, buy more iron machines, or if the food truck in your street or the flower selling woman in your street wants a loan, these small finance banks can do it. The idea is that they'll use technology right from the word go, and they will be able to lower the cost of their operation. So that's the essential goal of a small finance bank, and they have to cater necessarily to small finances, farmers, unorganized sectors, and so on, and they have to give 50% of the loans to small, medium, micro enterprises, and 75% of the loans have to be given to priority sectors like agriculture, small, medium enterprises, and so on. Some of the education loans also, and so on. There is a list available, you can have a look at it online. Their deposit rates are high. I think, I'm not a banker, I am only a lay investor, and I look at it, when I look at this, I look at it is, will I invest in this? And my opinion, my feeling is that the deposit rates are high because they want to attract market share. Otherwise, people, they are going to give the same rates as SBI and HDFC. Nobody will buy them. Although there is a convenience of online, etc., and so on. And please recognize that however high rate they offer, they must be lending to these small micro enterprises at a much higher rate. Otherwise, they cannot remain in business. Even if they are not doing so initially, even if they are taking in a loss just to establish themselves, they cannot do that for long, and they cannot remain in business. So, which means that they have to lend at a higher rate, which means that the rate of default also becomes higher. The higher the rate at which they lend out money, the higher becomes the risk of default. There are pros and cons to every investment. There are the pros of a small finance bank compared to a big bank is there cannot be a single big borrower. There won't be a Vijay Mallya or Nirav Modi kind of situation. So they'll have to give small loans to many people. 50% of the total loan should not be more than 25 lakh, and there are limits on the maximum loan size that they can give. So which means that they are not taking concentrated credit risk, which is good for the investor and their deposits. And they are mandated by RBI to have enough liquid assets to handle a cash crunch for at least 30 days. They must be able to handle this. You can see details of this in the article linked below. They also come under the deposit insurance. I talked about the deposit insurance a couple of days ago. So in case the bank goes bust, then up to 1 lakh will be eligible for deposit insurance. So these are the pros. Generally speaking, these are the pros, but there are also cons. The business model is new. They are lending to new sections of society, and these sections don't really have a credit profile on record. Nobody understands, nobody knows what is the repaying capacity of these small businesses, and I'll talk about that in the last slide more. And these banks have not seen tough times, cash crunches, bad situations in the economy, weak rupee, and so on. So they have not gone through that yet. And deposit insurance does not mean you will get immediately 1 lakh. Let's say today a bank goes bust and the next week you will get 1 lakh. That's not how it works. It may take months, it may take years. So it's not easy to that deposit insurance. What I mean to say is that deposit insurance is not. It should not be comforting. It's a technicality. That is all. If it kicks in, it won't mean you. It doesn't mean you will get money immediately. So let's not worry too much about that. So these are the general pros and cons. If you ask me, will I put my money in this? First of all, when I wrote the article, that article was commissioned. These days, I'm hiring content writers to publish certain kind of posts. So that article was commissioned, but it was written by a person in the banking industry. So as I'm always accused, the first accusation was that I'm biased. Of course, I'm biased. I have to be. If I'm going to think, am I going to put my money in this? I have to be biased in certain things. I'm worried about small finance banks, so I will not put my money in this. Some people say, why don't we put a small amount? What is there? It's only a small amount, na? We can put. Most people who are arguing in favor of small finance bank will only put a small amount. Nobody has the guts to put most of the money there. My argument is, why should I put a small amount just to get that extra 1%, 2%? I have better things to do. I mean, I want to think like a multi-crorepati, and a multi-crorepati does not run after peanuts, and I will not run after peanuts. Therefore, I will not put a little bit of money in these. I will put no money in these. That is the way I think. And the other practical observation is, I'm not a banker. I don't know much about the economy. I will give you a practical observation. I have been taking walks. I like to take walks. In the evenings after I upload the video, I like to go on a walk, and I walk in busy streets because I like to see people, how they interact with the shopkeepers and so on. You will be, I don't know how you will take it, but maybe it's something that you've seen. I am astonished that as many as 20-25 businesses, shops have shut down. New shops have come in their place. Many of the businesses fail. New businesses come. These are small businesses, small micro enterprises. Typically, the kind of profile that these banks have to lend to. Right? Many of them may not even know about these banks because they like to borrow money in their local circles, the local loan sharks, and so on. And you know what those loan sharks will do if they don't repay, and the rates will be higher than these small finance banks. So, at the rate at which, even if these small finance banks get popular in the sense their lending becomes popular, forget the borrowing, that is, forget their fixed deposits. If the small finance bank lending becomes popular, and if many of these businesses are going to fail, and they do fail, and it's a fact, just by walking, I have seen, just by walking 3-4 kilometers, I see so many small businesses fail. I'm scared. If you look at it over a large area, over the whole country, how many such small businesses will come up and how many will fail? No, it's like mushrooms. They come and go quickly. So that's the reason why I said the credit profile of this group, of this borrowing group, is completely unknown. Why would I put my money in such an organization where the main mandate is to lend money to this group which has got an unknown credit profile? It's a big risk. Okay, I can put small money, I can put a few lakhs which will not make any difference to my net worth. Let us say, the interest will not make any difference to my net worth. And if I lose that money, I'm going to feel bad. And I have to run after these things. I have to worry. I have to find out what happens. I have to follow the news. Why do I care? Why do I want all these headaches? So I will never put my money in this. I think it makes no sense to put a little amount just for psychological benefit into these banks. So the problem is, because these banks have got technological backing and they can market themselves digitally beautifully, people who do not need these kind of banks will push money into them. Whereas the banks have a very clear mandate to not only lend to small businesses, they must also accept deposits from small sections of the society. Are they doing that? Only people like us watching this video, people in the 20% slab, 5% slab, or whatever, or higher slabs, only people like us will come to know about these deposits and make use of them. Just like the Sukanya scheme. Many of the people who invested in Sukanya scheme are people who don't need that scheme, but they have the money to do so. So, I mean, there's something wrong in this whole idea. That's why I like the post office. The post offices have the mandate. They have a very clear mandate. They have to cater to that section of society, and they do not, and they have not so far, at least so far, they have not popularized themselves digitally. They want to do so, but that will take some time coming. But that is fine. So that's a clear small. That's the proper small. The post office in India is a real small finance bank with 100% government guarantee. If you want to invest in a small finance bank, invest in the post office. You have to have trouble getting your money back. You have to go to the post office, work with them, do the paperwork and so on. There will be a lot of hassles in getting money back, but you will get your money back for sure, for certain. But these banks, I think they are not worth the trouble. Somebody asked me about real estate investment trusts. The same logic applies to real estate investment trusts also. It's too new. Why would I put my money in it? What is the hurry? Let them evolve. I have safer investments to put my money in. So that's what I wanted to say. I'm sure many of you are going to disagree with this, but that's fine. Please have a look at the article linked below, and I'll catch you in another video. Bye bye.